This is Scott Burke with FexContracting.com, and I'm speaking today with Tim Winders, who's pretty well known by a lot of agents throughout the industry as being a real solid producer. He's got an agency that he's a part of called, you better say it, Tim, because I butcher the name of it all the time.
We go by Your Insurance Group, or the shorter acronym of just YIG.
YIG. I always get that backwards. Okay. So you're with YIG, which is sort of a business associate of FEX Contracting. We've got our Transamerica and Mutual Omaha and possibly some other companies in the future that we do business with Tim. And he's been kind enough to come on today, and we're going to do a recording here and kind of talk about how Tim works and how he has so much success. And one thing I want to start out with, Tim, is your business that you write, is it 100% final expense, or what portion of your business is final expense?
You know, Scott, obviously a lot of the people that we visit with primarily is going to be a final expense customer. You are going to run into situations where, you know, you may have that individual who really qualifies for something a little better than a final expense product. I think the challenges that we run into as an agent is a lot of the traditional life products will typically have a minimum benefit of maybe $25,000 or even $50,000 when you get into the IUL market. But you will find that those clients sometimes will fit into that category. You know, when they're looking for a final expense product, you know, where they want a $10, $15, or maybe a $20,000 product, yeah, I'll fit them into a final expense product. If they're looking at something a little bit different and the benefit and the premium, you know, fits to where that client is comfortable, then I will look outside the realm of just a final expense. But I will say the majority of what is written will be a final expense product.
Yeah, the other determining factor on the fully underwritten is usually their health too, right?
Absolutely. I mean, it's, you know, typically the demographics for final expenses, you know, Scott, is typically 50 between 85. You've got your low to low middle income people. But you are going to run into a situation where you have a 50-year-old client, but he may have a 45, 46-year-old spouse. And even though you can write them final expense, again, they may be very, very healthy, and they may fit into that criteria where a higher death benefit is going to fit for them, again, according to, you know, the premium that fits into their monthly budget.
Okay. Let's kind of go to the very beginning of you starting in final expense. How long have you been licensed as an insurance agent, and then how long did it take you from that time to kind of find final expense as a market that you wanted to focus on?
You know, Scott, before I get into that, just let me just say this, and speaking of myself and the other four owners and managing partners of YIG, we are very, very proud to be partnered with you and Travis with a couple of the carriers that we do have. Scott, as you know, I've had a previous relationship with Travis for, gosh, I think it's been a little bit over 5 years. He is definitely an icon in this industry, just a great individual. So I'm glad to see that our paths have crossed again. And obviously for you and I, we've known each other for, you know, several months. And even though I've never had the pleasure of shaking your hand, we're very, very proud to be partnered with you and your agents. You know, a lot of your agents from that you have, I had associations with in the past. Mr. J.D., as everybody knows, John Duggar, Dustin Mitchell out there in Louisiana. I had a previous relationship with him. So we are definitely looking forward to partnering with you and moving forward in the current carriers and hopefully some future carriers in the future. But, my career, gosh, it seems like it just started yesterday, but I've actually been in the insurance business for 28 years. I started when I was 15 years old, but no. My dad was in the insurance business, and I'd always been in sales, and I finally hooked up with my dad and slowly got into the insurance business. Made a big leap of faith, but never looked back. It was back in the day when I started, I was traveling all over the country. We were doing, disability insurance. We were doing long-term care. We were doing some indemnity products. I was pretty much a captive agent with that outfit for about the first 10 years of my career. And then, in I believe it was 96, I went to work for another captive agent, but it was a multi-line company. A lot of you might have heard them, Farm Bureau Financial Services. There I spent 3 years of my career, and it was a great, great education for me because I learned everything from property and casualty to estate planning and everything in between. After about 3 years with them, I realized that, going independent was probably going to be more profitable and more beneficial to me. At that point, I'd had about 13 years experience. Now I had to come into a new realm. But when I went independent, I was working a lot with, and at that time, in the late 90s, the annuity market was booming, long-term care was booming, Medicare supplements have always been there, life insurance has always been there. Then we started generating into the Medicare Advantage, which I, dipped my toe into a little bit. So that was really my primary focus, was the annuities, long-term care, life insurance. And, Scott, about that time, probably, I want to say in the early 2000s to 2005, the annuity market really changed. Getting leads for annuities was very, very expensive. A lot of carriers in the long-term care industry quit writing the long-term care. And so with wearing many different hats, the long-term care, the med supp, the life insurance, the annuities, I just came to a realization that I had to reevaluate my business. And at that time, it was kind of new to me was the final expense. And it was really crazy, Scott. I mean, I had ordered a bunch of leads for final expense, and I'll bet those leads sat on my desk for 6 months before I even touched them. I had the responders were sent directly to me, and I was getting frustrated with the annuity market, with the long-term care. And so one day I picked up those leads, and I just went out and started door knocking. And it was...
Now, let me ask you a question.
Sure.
Prior to that, most of this business you're writing, were you doing it at people's kitchen tables, or were they coming into your office and meeting with you?
No, I've always been an agent that goes to see them. Yep, my office is actually located in my home. I obviously have had a few people that want to come to the office, and that's fine. But my business has always been, go visit with them.
Okay. But now, so, when you say you had stacked leads piling up and you weren't excited about going out and getting them, what you were getting leads, but was it just that the sales cycle was taking too long, or the underwriting was too tight, or what was it that you were not happy with?
At that time, Scott, I was just, I ordered those leads, because I wanted to have, the mail back at that day and the response rates were so much different than what they were today. You could send out 1,000 mail pieces and you might get a 3-4% response rate because it was something that was fairly new at that time in the industry. And this was probably about 7 or 8 years ago. And so when I ordered them, I just started getting them in, but I was still working my other stuff, so I just really didn't do anything with the leads. But as things started getting a little frustrating, if you will, for me, the annuity sale, everybody and their brother was doing it. Back then, the annuity commissions were very high, but boy, you really had a lot of competition. You may sit with a client 3, 4, 5, 6 times before you get them to move an annuity. With long-term care, again, you're dealing with a high-dollar product, and it was a little bit more of a callback close. It wasn't a, one-stop close and you were done.
Right.
So, it was getting frustrating to me, and so again, one day I just had to take a good hard look in the mirror and say, okay, Tim, here's the thing. You can maybe be pretty good at working with long-term care, pretty good with annuities, pretty good with the med subs, but how about we just focus on one thing and become really good at it? So that's kind of what I decided to do. I looked at it and said, life insurance has been around for 100 years, and it's probably going to be around for a lot longer than I am, and it's something that everybody needs. And you combine that with the final expense market. When you look at, the majority of the population, I'm going to guess that 80 to 90% of the people that are in America probably fit in the income demographics that we work with. And then you couple that with, we've got more people than ever before turning 65, over 10,000 people a day. That makes this market pretty darn big. So I kind of threw off the annuity hat, threw off the long-term care hat. I put my life insurance hat on and said, okay, let's give this a shot. Let's reevaluate my business. Let's see what we can do with this. So I thought, well, I've got some leads sitting there, and I had a stack of them a couple inches high. And
good problem to have.
It was a good problem, yeah. I didn't realize what kind of a gold mine I had sitting there. And so I grabbed my leads and went out and just started door knocking. And I was just winging a presentation, Scott. I really didn't have anything set. Just kind of went in, did the warm-up with the people, and here was the responder that they had sent in. Here was the information that they had requested. And, the first day that I went out, got a little lucky, and I think I wrote a little over $3,000 in premium just that day, just by going out and knocking on doors. And I thought, boy, there's got to be something to this. So what I did is that night, I came home, I sat down, and I put together a little one-page presentation. It's like, boy, I can't wing this. I need some direction. I need something I need a system. And I put together a little one-page presentation, and it basically just kind of explains, what are final expenses. Here's some options as it relates to paying for your final expenses. And I would explain those options a little further in detail. And really the way it's designed is, if it's explained properly, my question to the client would be, which option makes the most sense to you? And the way it was set up is they would always choose option 3, which was the state-regulated final expense whole life policy to take care of their funeral costs. And so as time went, Scott, I kind of perfected it and tweaked it and did this and did that. And I've been running, final expense, even probably a year to 2 years prior to my association with Travis. So I want to say it was about 7 years ago when I really jumped into this. And what was rewarding to me was you could feel success every day out in the field working in this market, because you can get in, 5, 6, 7 people you can sit down and do a presentation with in a day's time. And I've always just tried to keep it on that format. Is it's simplified issue. Let's give a simple presentation. And, you're looking at maybe $30 a month premium, maybe $60, maybe $130. It's kind of crazy because everybody's a little bit different. You got different age brackets, you got different affordability for different clients, but boy, the apps just started rolling in. And at that point in time, I realized that I had a great product, felt like I had put together a pretty decent presentation, and I knew
it was working.
Pardon me?
I said it was falling together. It was working.
It really was, Scott, and it had brought back the excitement for me in the insurance industry. And boy, I'll tell you, I really dug into it very hard, and I realized real quick that the only way I'm going to keep this engine running at high RPMs, if you will, is I need a lot of people to go see. And so I was contacting mail houses back then and ordering my own leads. Every Friday I was spending roughly $1,500 every Friday putting out a bunch of mail, and I was doing it within about a 100-mile radius of where I lived. I would put some north, some south, and try to do it in a proper manner to where I wasn't doing 100 miles north and then 100 miles south. I'd kind of do it like a clock. Here's 12 o'clock, here's 1 o'clock. Let's just kind of do the leads in a circular motion and try to keep some sort of system with it. But yeah, I was spending a lot of money on leads, but the return was phenomenal. And so it was just where I had to invest into my business. And I know even today that, and it's always been a challenge, that there's agents that are a little bit financially strapped with purchasing leads. What kind of leads do I get? Where do I purchase them? Boy, this seems to be a lot of money. But if an agent has confidence in themselves initially, and they believe in the system, the presentation, the carriers that they're utilizing, all they have to do is invest in themselves. And I kind of call it the trifecta of what an agent really needs to be successful. And maybe you'll agree with me, Scott, and maybe you won't, but number one is, yeah, you've got to have good carriers and a competitive product. You need to have training and support, and ongoing training and ongoing support, which, Scott, you look at your and Travis's system, you guys have that.
Yeah, then that's our big draw.
Absolutely.
And I'm sure your agencies also. That's the one thing that agents can't find easily out there, that when they do come to us and they've been a few other places, they're kind of amazed that they never heard of us before. A lot of them are, they are just amazed that other agencies don't do that, because that's one of the pegs in the stool, I guess you say, the 3 pegs that if they don't have it, doesn't matter how many leads they have or how many companies they have, they're not making any sales.
Right. You know, and the third leg of that is the people to go see. And, you know, if you take any one of those 3 out of that group, you know, the carriers, the training, the support, or the leads, you know, you take any one of those 3 out of that scenario, and I think an agent is going to have a very, very hard time. And so once you have that built, and that's why your agency is very successful, you have all those 3. That's why YIG is successful. We have all those 3. And so it's, you know, sometimes I talk to an agent, I say, look, if you were a restaurant owner, would you not order steaks for your restaurant? You know, if you're a steakhouse, would you not order steaks? You know, this is the same in this business. You have to invest, and your investment is your leads. But where can a guy go out and make the kind of money that we can make on a very little investment? You know, this isn't putting in $20, $30, $100, $200,000 to buy a franchise. This is a couple of $1,000s to get yourself started, but you have to keep yourself in tune with the reinvestment into your business, and that's people to go see. So I put together several different lead venues, and, you know, I had leads coming in left and right. And then what I had to do, Scott, was, you know, I was never a guy to sit down and write goals. You know, what do I want to do? What do I want to accomplish? You know, whether it was a short-term goal or a long-term goal or just a daily goal. And so I always figured, you know, back when I was, you know, 28 years ago, I was a snot-nosed kid. You know, people were talking about goals and this, and I'm like, phooey, I don't need to do that. You know, just let me go out, let me go see my people, let me make some money, and I'll enjoy the weekend, and we'll do it again next week. And so I started to put together, you know, my goals. I guess maybe maturing in the business. Maybe I matured a little bit late, but I guess I figured at that time it was, never too late to start doing that. But I did. I put some goals together, you know, daily goals, weekly goals, monthly goals, and yearly goals. And incorporating that with everything else, it just really took off for me. And the better it took off, the harder I worked at it. And the harder I worked at it, the more it benefited me. But I will tell you this, Scott, you know, everybody says that, you know, I got into the insurance business to have freedom, to have that luxury of time. And that's exactly what this allowed me to do. You know, I still never worked any more than 3 or 4 days. When I was a full-time agent, I was working those 3-4 days, but I'll tell you what, I never worked a Friday. I never worked Saturday. God forbid, I never worked Sunday. But I'll tell you what, come Monday, I was at my first home giving a presentation no later than 10 o'clock on Monday morning. Now, when I say I never worked Saturday, I might have lied a little bit there, because when I was setting my own appointments, my Saturday morning from maybe 9 o'clock till noon, I was on the phone calling and setting appointments. I wanted to make sure I had a very full Monday and Tuesday. And so that was my Saturday, but I had to do that. That was my business. Doing that made me accomplish my goal of being at my first appointment Monday morning at 10 o'clock. My second goal typically for that was to have my lead costs paid for on Monday. I wanted to go out, and typically I tried to have it paid by noon. You know, that was my goal, to see if I can get my lead costs paid by noon on Monday. But what
Then the
really
rest of the week's
instilled
your profit.
Oh, you know, it's just little games that you play with yourself, you know, and I get it. You know, there was Monday mornings way back in my early career where I'd get up and I'm like, boy, you know, I had such a heavy, hard weekend. I need today to take off. Well, it wasn't such the case with me at this point, because my thought process was this, Scott, is that if I have a great Monday in the field, and I will tell you that some of my biggest days came on Mondays. Don't know why, but they did. But my thought process was this: if I have a great Monday, it just sets the pace for the rest of the week. If I had a bad Monday, I'm not feeling the pressure of, oh my God, you know, now I have to go out and I have to make sure I see these people. You know, and you start turning the screws a little bit when you're with the client, and they can feel this. Because if I had a slow Monday, it always was with me that Tuesday, it's only Tuesday. I got Tuesday, Wednesday, Thursday to make a week of things. But then it also made me realize I got my no's out of the way on Monday. So now I know my yeses are coming. And I just had to continue to see the people. And people that have been around me long enough, they know and they've heard this phrase so many times. It's, you've got the companies, you've got the training, you've got the support, you've got the lead system. Now there's three things that's going to make you successful. See the people, see the people, see the people. And that is all it takes, because this is not a hard presentation. It's not a difficult product to understand. But the more you can tell your story, the more success you're going to achieve. So that was just really my mindset. And, you know, after doing that, and, you know, what they say, after 30 days, a habit is formed. And it just didn't take me very long to realize that, boy, Monday morning, 10 o'clock, I'm giving my presentation somewhere to somebody. You know, all the other stuff, you know, the doctor's appointments, the accountant, the oil changes, the lawn being mowed, you know what? That was something for Friday and Saturday and Sunday. So I always put the work first. You know, work hard, play hard, but in that order. And it just became a habit to me. And that's really what I did as I moved forward in this career. And, you know, after, I want to say, about a year of doing this, it was very successful. But, boy, I found myself spending a lot of money on leads. And I found an avenue to where I could get leads a little bit more cost-effective for me. And that's when I was introduced to your partner, Travis Tubbs, and spent a couple of years working with him. And he was my regional director with a previous company, and we just formed a wonderful relationship. You know, just, I mean, as you know, he's a great guy, and he's an icon in this industry. He just, you know, he knows how to get things done, and he's a hell of a producer. So I think it was great. We got to feed off of each other, and, you know, I learned so much from him. I learned so much from John. And, you know, my theory is this, is that if I know what I know, and I know what Scott Burke knows, and Travis Tubbs knows, and John Duggar knows, boy, that makes me pretty dangerous. And that's why I always keep an open ear when I talk to people of that stature. So that's really kind of how it all started, Scott.
That's interesting. So you came from a background where you did the more fully underwritten products and had some success there and everything, but it wasn't as wasn't as fulfilling because the sales weren't as quick and easy. It sounds like his final expense was, the attraction of final expense was you made more sales quicker, less frustration, and it was easy to develop a system to repeat it over and over. Is that kind of...
You're exactly right. And, you know, when I was in the multi-line industry, I mean, that was, to me, the craziest business. You know, anybody that's done work with property and casualty and health insurance, if you will, you know, it's a slow boat to China, and it's a lot of service work. You know, I need to change this, and if there's a claim, you know, it's always the agent that gets that phone call. You know, you get phone calls at midnight, you know, gee, I got into a car accident, what do I do? And it was just really crazy. But it was a great education for me. But it made me realize that I don't want to monkey around with property and casualty. I really don't want to get too involved in the health industry. The life insurance side was the avenue for me. You had, again, the traditional fully underwritten products, you know, back in the day where they didn't even have the simplified issue products or the guaranteed issue products. There was people that were, yeah, they would apply for life insurance and they just couldn't get any. So thank goodness to the industry, the underwriters, the life insurance industry, they start designing these plans, you know, the guaranteed issue, the simplified issue stuff, and really opened up the books. And, you know, my career took off by leaps and bounds, and so did my checking account. And so that, you know, you see the business being written, you see what's happening to your income, and I'll tell you, if that doesn't excite somebody, I don't know what does. So it really, everything just snowballed for me. You know, I saw the apps being written, I saw how this system worked, and all I had to do was take advantage of it and get myself in front of people. The more presentations I did, the more people I wrote, the more commissions I made. But you know what? I wasn't working 7 days a week either. I still had that freedom of time. But I tried to manage the time to where, again, work hard, play hard in that specific order. So,
now, Tim, the way you work now, how does your week go as far as, it sounds like you set appointments on Saturday for Monday, so Monday's definitely a field day for you. What's Tuesday? Is that a day where you set appointments, or is that a field day also?
What I do, Scott, is back when I was doing my own appointment setting. I have many years, about 5 years ago, I incorporated an appointment setter, an assistant for me, because it was driving me crazy. You know, I've got 3 kids. 2 were out of the home at that point in time, but at that point I had he's 15 now, but you know, back then he was a young man, or a young little boy, I should say. And it would drive me crazy that I had to sit here for 3-4 hours on Saturday morning and set appointments. You know, he was always tugging at Dad's pant leg. Dad, come on, let's go, let's do this. Now that he's 15, I'm kind of tugging on his pant leg to try to get some time with him. So the roles have kind of reversed a little bit. But no, that Saturday morning was very important to me. And what I tried to do on that Saturday morning was set up a very good, solid Monday and Tuesday. Now, again, at that point, being a single dad, my son would, over a 2-week period, he'd be with me 50% of the time, and he'd be with his mom 50% of the time. So my weeks were a little bit different, and every week was a little bit flip-flop, because if I had my son on the weekends, then Monday and Tuesday were what I called my long days in the field. I could work from 9 in the morning until 9 o'clock at night. If I didn't have my son on the weekend. Then Monday and Tuesday he would be with me, and I called those my short days. Those were typically 9 to 5 days for me. But when I would set up, no matter if it was a long or short day, that Saturday morning was very important for me to set up my Monday and Tuesday. Now, on Monday and Tuesday, when I'm out running appointments, what I would be doing is in the interim, I would be calling my leads to set up my Wednesday and Thursday. Well, you can see where that can just get really time-consuming when you're out running appointments and you still have to try to set appointments. But, I mean,
so you're saying between your scheduled appointments, you would make calls for the next day or the Wednesday
right.
from your car using your cell phone.
Right. I mean, it was, full day of any free time I had. My leads were getting called. I was trying to set appointments, or, I was still door knocking. Here I'm driving down the road with my cell phone in my hand, calling people, going to the next address to see if I can get a door knock in. And so you can see where it just really, really gets very, very busy. But, no matter how an agent runs his campaign, whether it's, I've got agents that all they do is door knock. They will not pick up a phone. I've got agents that's all they do. I remember JD, and I'm sure he uses this same system, where John would, Monday was his call day to go out and set appointments and work on Tuesday. Wednesday, he'd be back on the phone for appointments on Thursday. I'm sure he still does that. Am I correct?
Yeah, he does.
Okay. And here's a guy, again, that is very, very successful. He's got his weekends free, but he takes advantage. So Monday, instead of, my goal is to be at a kitchen table by 10 o'clock, and I'm sure he's on the phone setting appointments prior to that time, but he's got a system, and it works good for him. And good Lord, how many hundreds of thousands of dollars in annual premium is he writing using that system? So, whether you're calling on Saturday morning or you're doing something like the system that John has, is the activity that you're doing creates the aptivity. So, he's calling, setting up stuff for his Tuesday appointments, and he just goes out and writes a lot of business. So that system works for him. But what I eventually ended up doing, Scott, was I needed to free up my time. I just wanted to fly the missions. So I incorporated an assistant, and I'm pretty lucky there because my executive assistant is my sister, and she works very hard, and she gets paid pretty well for what she does, but, take nothing away. She works very, very hard. So being the owner and managing partner of YIG, my responsibilities have really changed a lot. And so typically I'm only, where it was 3-4 days in the field before, it's down to 1 and 2 days in the field. But I'm still buying leads. I'm still setting up the appointments, or she is, I should say. And I'm just flying the missions. So she's setting them up. I'm going out and hopefully writing the people that I go see.
So now every day, Monday through Thursday, is a field day for you, and your sister is setting your appointments for the most part. Do you still come in on Saturdays and set some of them up, or does she do all of them?
Nope. As a matter of fact, Scott, we had this, for people that don't know, today's Saturday. You and I we were on the phone at 8 o'clock. Prior to our call, I called her and set up my schedule. So now, again, my son is here with me this weekend. So I called her earlier today, and Monday and Tuesday will be my full days. Timmy will be with Mom. And so she was instructed to set up my Monday and Tuesday for very, very long days. Now, again, with my responsibilities changing, typically what she would do is she would set, for her calling today, she would concentrate on Monday and Tuesday, because you just don't want to set appointments too far out. And then come Monday and Tuesday, if I were in the field full time, Monday and Tuesday she would be working on my Wednesday and Thursday appointments. So, but right now she's calling as we speak, setting up my long days for Monday and Tuesday. And then, of course, whether I probably won't be in the field Wednesday and Thursday, just because of I can't be a full-time agent anymore. I'm still recruiting and I'm training and everything else that goes along with the YIG system. So.
Right. Let me ask you this. How many leads is she working for you a week?
Typically, I have always worked, Scott, I always tried to get in 30 leads a week. Why I did that was it just seemed to work for me. I guess I tried working the numbers. And not having the time to be a full-time door knocker, if you will, I knew that it was going to be a little more of a challenge getting appointments over the phone than door knocking. I think it's a little bit easier for people to say no over the phone than if you're face-to-face in front of them and you have a copy of the responder card and you've got your name badge on that says who you are and who you work for and you're dressed professionally, and it's a little harder for them to say no at the door. So I knew two things. I needed a lot of people to call, and I needed to have, for lack of a better term, a good phone script. And I don't like to say script because how I trained her was not a scripted phone call. And it was more kind of what we're doing right now, Scott, is just one person having a conversation with another person. And so she does a very good job of that. I mean, we've all had those telemarketers that call, and you can tell that they're just reading from a script. And
I
didn't
can't
want to
get off of it.
Yeah, right, exactly. And they just keep on talking. But I wanted to have it more of, a conversation. And, like if you're the individual that, that sent in the responder card, hey, Scott, how you doing? Well, looks like we're going to have you know what I'm talking about. And
right.
So I knew I needed a lot of leads. That,
out of 30 leads, how many appointments does she typically get you out of those?
Again, this business is not chemistry and it's not DNA, but I always try to shoot her goal with 30 is to try to get me in front of 20 people. Now, with my 2 full days being Monday and Tuesday, I am hoping that I can get 5 to 7 appointments each day. So if I can do that, I'm going to be between, 10 and 14 appointments for just Monday and Tuesday. Now, if I was working all 4 days in the field, I would expect, and again, sometimes we hit it, sometimes we don't, but I try to get between 15 and 20 appointments out of those 30 leads. Now, the beauty of getting, whether it's 20, 25, or 30 leads a week, you always have those banked leads, and those leads are never dead until the client is, until that prospective person on that card. Because it is really funny. You should see her office. She's actually located down in Omaha, Nebraska, so she doesn't live here in Sioux City. You can't believe the shelves in her office. I mean, after all these years the leads are all there. She gets them, she prints them off, she works them very diligently. But it really is funny because she'll say, Tim, you'll never believe this, I've got an appointment for you on a lead that was sent in 2 years ago. I'm like, great. You know, that is working those leads and being very diligent with all the leads that you do get, because if they're not a buyer today and they're not a buyer tomorrow, they may be in 6 months, they may be in 12 months. It could be just situational for this individual. You know, maybe they had a life-changing event. But when you look at, you know, what you spend, I don't care if you're spending $5 a lead or $40 a lead, it's all going to be a return on your investment, getting something out of that responder card. So, you know, we sell older aged leads to agents. And, you know, we've got what we call a B lead inventory. These are leads that are 6 months to typically 36 months old. You know, I've got my own inventory of B leads because I've been ordering leads for about 7 years, 8 years, whatever it might be. So I've got my own inventory of B leads, and again, it's just that lead is never dead until that individual is. It is kind of how I look at it. So,
and that's something that I always make a point of telling new agents when they're kind of frustrated that they're, you know, may not get as many leads as they want, or some of their leads didn't turn out well. I always tell them it's hardest in the beginning because, first of all, they're the worst at this they're ever going to be when they start. You know, they're going to get better every year, every month. But also, the only people they really have to see is the leads they got in this week in the beginning. And as you get a year, 2 years into this, you've got your B leads you build up. You've got people that bought $5,000 policies from you that told you they wanted more in the future. You know, you can go back on. You've got more than just your weekly leads to see once you get rolling in this. And that helps them a lot.
Yes, it absolutely does. And, you know, the B leads, Scott, that we've opened up to you and your agency, that is such a great way to kick off a large number of people to go see if there happens to be inventory in that arena. But, you know, you hit it right on the head, Scott. It is, you know, today they're the worst they're ever going to be. But, you know, utilizing this system, and it's, you know, back when I started in this industry and, you know, I saw these guys that were just, you know, they were the icons of the industry and they were writing all this premium, and, you know, those were the coattails that I tugged on. And those were the guys that I wanted to listen to. Those are the guys that I wanted to ask questions to. Because, you know, my theory was always this. You know, my mind is like a parachute. The dang thing isn't going to work unless it's open. And I need to be open to different ideas, different techniques. And whether those ideas come from somebody that's been in the business for 30, 40 years, or it comes from somebody that's been in the business 3 or 4 weeks, it just doesn't matter. If it's a good idea and it looks like it's going to work, I'm going to listen to it. But you're right. It's, you know, sometimes when you get introduced to a doctor, gee, Joe, what do you do? I practice medicine. Well, to me, that response is kind of like what we need to be thinking is, I practice insurance sales. So tweaking our presentation, working on our presentation. And you said something a little bit earlier about, oh, God, these were bad leads. You know, I get that. You're not going to have an $8,000 week or, you know, every week. You're not going to have that $3,000 or $4,000 week every week. There's going to be weeks where your production's a little bit lower. There's going to be weeks where your production is a little bit higher. But let's face it, at the end of the day, these people fit the same demographic, whether they live on the East Coast or the West Coast or right here in the Midwest. But if a guy has a good presentation and a good work ethic, he's going to be successful. That's, I've had a lot of agents that have done that. It's like, wow, these leads are terrible. Hey, Joe, do me a favor. Your next day out in the field, how about you do this? Take your recorder with you and record your next 3 or 4 or 5 presentations and send them to me. Let me listen to them. Boy, I'll tell you, that really changes things for that agent. Because you can you can hear what they're doing in the field. And, Scott, really at the end of the day, there's really only 2 different types of presentations in this industry, and that's a flip chart presentation, or what I like to call mine is the one-page presentation. That's really the only way to present this product that I've seen that works anyway. And so for an agent, it's practicing the presentation. You take John, you take Travis, yourself, Scott, you take Dustin, you take these guys that are writing a lot of, they could do their presentation frontwards and backwards, and they could start at any point throughout the presentation and just start rolling with it. Because they've practiced it. They've used it a lot. But the best thing about it is if you make a mistake, nobody's going to know. The person you're presenting, they have no idea if you've made a mistake throughout your presentation. You just regather yourself. They've never seen it before. You're right. But I will tell you this, too, is working a lot of those older leads or people that have already seen an agent that has presented them with some form of, maybe it's final expense, maybe it's life insurance. When I work and I have these people, oh, gee, hey, Tim, there was just a guy here, 6 months ago, and, just didn't feel that it was the right thing for me or whatever. That doesn't slow me down because, and please don't take this as arrogance because that's just not who I am, but I feel that I've got a very, very strong presentation. And it's kind of a little bit of a challenge, and it's kind of a fun little game that I play with myself, is that, okay, they saw somebody 6 months ago. Let me knock out a presentation and see what we can come up with here. And, I've heard a lot of common response from people. They say, you know what, Tim, that guy that was here before, he didn't explain it to me like you did. Now I understand it. Because put yourself in a position to where you're going to buy, let's say, new appliances or a car or furniture or whatever it might be. And I know we've all been there where, the salesperson is, all they're trying to do is get money from your wallet into their cash register. But there's some that do a tremendous job. You're buying a new car. They're showing you all the options. They're answering all your questions. They're just not trying to get you into that finance office in the building to do the paperwork. They're taking their time with you. They're showing you why you should buy this model versus the guy down the street's model. Hey, here's the advantages of this. And so I always try to put myself on the other side of the table, and I want to make sure that that client knows what are funeral costs, what are final expenses. To me, there's a difference when you say funeral costs and final expenses. There's a difference there, and I try to explain both of those to that client. Joe, here's your options to take care of this huge financial burden that you may leave behind to your loved ones, and I show them what their options are. then I kind of go into a little bit further detail of those options. And at the very bottom of my presentation, it just simply says which option makes the most sense to you. And I will guarantee you this, that if it's done properly, they'll all say, well, option number 3 is. And option number 3 is the state-regulated final expense whole life policy that they can get in force. So this is something that you don't have to reinvent the wheel. It's already been administered. It's already in place. All you have to do is follow the system, practice your presentation. You know, again, we generally train our agents on 2 different presentations. You know, kind of a flip chart presentation or the 1-page presentation. Both very effective. There's an agent that we have that kind of does a little combination of both. But it's just knowing the presentation, keeping the flow going when you're with the client, and taking control of the situation, but not in an unprofessional manner, if you will. I mean, let's face it, these people like to venture off. They want to talk about this and that and everything but what you're there to talk to them about. But it's just, you know, kind of taking control of the situation and keeping that presentation, you know, moving in a good flow. And, you know, these are things that, you know, 28 years ago, you know, these are things that I didn't know, but I had to learn as I went through. But here's where the agents in your agency and in our agency, Scott, you've been very successful. Travis has been very successful. The partners at YIG have all been very successful in life insurance and annuity sales. They've been through the trenches. We can train them how to avoid those bad times. We can show them the path, if you will, of least resistance. Now, let's make no mistake. These people will kick your tail out there every day, and when it happens, and you know, there's days where I want to pull my hair out. There's days where I'm pounding on the steering wheel. But I also know that, hey, look, that one's done and over with. I still have a lot of people to go see, and I can still make it happen. And with an unlimited income that somebody can earn in this business, it's, you know, don't take advantage of the self-employed status. You know, still treat yourself like you're an employee. You know, for me, my goal is to punch that clock at 10 a.m. on Monday and be given a presentation. So, you know, I'm not waking up Monday thinking about, gee, am I going to go to work? Am I not? It's just, no, I'm getting up Monday. I'm getting ready, getting rolling, got my kit done. I'm ready to roll down the road to start seeing people and making presentations.
That freedom is what kills a lot of agents. They can't self-manage themselves.
You know, Scott, you're exactly right. They abuse the self-employed status. And again, you know, there's agents that they don't want to work that hard. They want to be kind of part-time employee, and that's okay. That's okay. You know, we can train that agent to write as much premium as he wants to in each given week. We can take an agent that wants to go from that level to the next level. Gee, you know, I'm writing $2,000, $3,000 a week. How do I get to the $5,000 level a week? This is what I want to do. Okay, let's see where you're at. Let's see how we can get you to the next level. You know, we've got guys that are absolutely crazy in this business. We've got an agent that, you know, this guy works 6 days a week. He's got a huge goal that he wants to accomplish. And he works the system the right way. He takes advantage of the lead options. You know, the way he's set up, his average lead cost is like $10 to $15 a lead. The way he's managing the B leads, pre-recorded contact, the different lead systems that are available. And this guy lives in one of the very worst parts of the country for a response rate. And he's just knocking them dead. I mean, I think...
See, in California?
Actually, he's in Arizona. California, Arizona, Florida. Those are typically the first three states that you come up with as far as response rates. And, but he's just, he's an animal. And, not that anybody has to do that. The point I'm trying to make is it's out there. You can hit any level that you want. I mean, just a couple weeks ago, this guy turned in 20 applications, in a week. I mean, that is phenomenal. And it's crazy. But, for these people that, gee, I'm getting 10 leads a week, and they're frustrated, it's like, okay, we need to reevaluate, your system. You're at this point, the first thing, you need a lot of people to go see. So we can take care of that. Secondly, let's work on, your work habits. What do you do? Give me a snapshot of your week. Let's hear your presentation. Let's see if we can't get this thing tweaked, because there's a lot of aspects of this business. If a guy's getting a lot of leads and he's seeing a lot of people and he's not writing a lot of business, well, that tells me we probably need to work on his presentation. If he doesn't have a whole lot of leads, but his ratio of people that he's seeing is very good, that's pretty simple. We need to get you in front of more people. How are we going to do that? We need to increase your lead flow. We need to work on referrals when you're in the home. So there's so many different things that you can really manage and pinpoint with agents that maybe they're struggling. We're all going to have a bad week. We just have to face that fact. Sure, I get it. This lead was terrible. Okay, so what? Tear it up, throw it in your back seat. You're probably never going to go see that person again. But
Tim, let me ask you something.
Sure.
It sounds like you definitely work direct mail leads. Do you do any other type of lead at all?
You bet I do. I dabble into about every type of lead that's available. I will tell you this. I work primarily on the brand new fresh leads, though. Whether it's via the direct mail or the set lead price, which again is still direct mail. But the pre-recorded contacts, the pre-recorded leads, if you will. Another great venue for an agent that doesn't want to sit and wait. He starts a direct mail campaign. He knows that, it's going to be 3 to 4 weeks before his lead flow starts to come in. Those pre-recorded contacts, that's something that can be a very quick turnaround time. But again, it's a brand new lead. But
now, when you say pre-recorded, is that a telemarketing lead where they get the entire recording of the conversation? Is that what that is?
Right. Exactly. And typically, with the vendors that we use, and I think you guys use a pre-recorded lead or a telemarketed lead, that we have set up the script. Again, I don't like to use that word, but we have set up the script for them to use, and typically what they will hear is kind of the last few minutes of that conversation, where the telemarketer will verify. Mrs. Smith, now you did say it is okay for Scott Burke to contact you regarding the state-regulated life insurance program to cover your funeral costs and final expenses. Oh, yeah, he can certainly contact me. Then they'll verify all the information from this individual. They may ask them a few, are you a smoker, or this, that. They may ask them a few questions. But that's the recorded part that the agent actually gets to hear. And it's personalized to that agent. As you just heard, I used your name from the telemarketer. They will use your name when you hear that recording. So even though you don't have a signed responder card, you will hear that recording. And when I work those, it's basically they send it to you via email, and I've got it right in my phone. So these people can't, that wasn't me. Oh, really? You hit the play button, and
they are.
There's their voice on there. So,
Tim, let me ask you this. In your experience on your sales, how do the telemarketing leads compare to the direct mail? Do you prefer one over the other?
I've always been kind of a direct mail, and the direct mail has been working for me. Whether it's whether I'm doing the $29.75 leads, if I'm doing just the set price per mail, I've always liked that. But the pre-recorded, I was never in a position to where, hey, I need leads tomorrow. For 7 years, I have never ever skipped 1 week, not one, of putting mail out. Even if I'm on vacation for 2 weeks, which that hasn't happened for a long time, but if I'm gone somewhere for a week, I still keep the mail out there. So I've always had a big, huge lead flow coming in. But I did try those just so I could experience those, so I could really tell agents firsthand how they worked. And yeah, I wrote a lot of business with what I did. I think I did 30 or 40 of them. I wish I could tell you the exact dollar amount, but there was a lot of business written from those pre-recorded contacts. But the nice thing about that is, let's face it, these people get a ton of stuff in the mail. And there's a lot of them that the first thing they do is they go through, pick out all the junk, throw it right in the trash can. There's a lot of people that haven't even seen the mailers that we've sent out. We might have sent it to them 10 times. But that's maybe a person that's going to pick up their phone and visit with a telemarketer and allow us to come see them. So you're hitting them.
What ages are you mailing to when you do your mail?
I open it up to 50 to age 85.
So you go down to 50?
I do.
And then what income levels?
You're typically in this, you're going to see 10 to 15,000 up to 50 is generally the demographics for final expense. And that's not a perfect science either. You might run across somebody who's, on disability, they're making $600 a month. Well, that doesn't quite get them to 10,000, and you might run across on the other spectrum where you roll up to a home and it's like, oh boy, this is too nice of a home for a final expense, So there's no perfect science with this. But again,
yeah, the income brackets are definitely they're not accurate on these lead lists a lot of times. They can help screen out the bottom and the top, but you get leads either way. I was in a lady's home. I always try to screen out on the bottom. I do 15 to 50, and I just don't do well with the totally impoverished clientele. And JD and I are working the same area. He loves the lowest of the low income, and I just can't. I can't make sales with him. I just can't see how you can get money from him. But I was in a house last week on one, and this lady lived in a Section 8 apartment. She nice lady. Her son lived with her, but definitely no money there. But I say no money, but my mindset was that way. But last year, 12 months ago, a Colombian Life agent had been in that house, and he had this lady set up with a $100 a month premium on herself, and she had bought a $75 a month premium on her son. Son wasn't helping her at all. You could tell he was mooching off of her.
Right.
$175 a month.
It is crazy. It's, you know, I had an agent here a while back say, boy, send me every lead in a trailer court you can find. You know, he loved it. He had great success in trailer courts. But, you know, it just goes to show, you know, don't judge a book by the cover. You just never know what's behind that. I mean, even if they're in Section 8 housing, you don't know what their situation is. You know, they may have a heck of a nice little inheritance that they're hiding somewhere that, you know, to still get the housing.
Some of them have little side jobs where they have extra income. They may be sitters, or they, you know, get paid for watching other people's kids or something. You never know. Everybody finds some way to generate money for themselves.
Right. Well, and the crazy thing is, you know, you can really design a plan that fits almost anybody's budget. You know, Mrs. Smith, if I can design a plan that you qualify for, where between $1 a day and $10 a day would fit your budget. You know, you got $1 a day, it's $30 a month. $10 a day, $300 a month. You know, it's going to fit somewhere in there. Somebody and anybody out there can save $1 a day. You know, when you really put it in that perspective, that's less than a newspaper. You know, $1 a day is a lesser cost than a daily newspaper.
Yeah.
You know, and when you really put it into those perspectives, you can pretty much get a plan that'll fit anybody's budget.
Let me ask you this, because you're known to have a very high average premium.
Mm-hmm.
And what is your average premium, by the way?
You know, Scott, I really, for a long time, I kept track of it, and at that point, it was between $900 and $1,000 for the annual premium. I don't think it's really changed too much from that point, because
so somewhere around $70 to $80.
Yeah, probably. Yeah, exactly, 75 and north of there.
Okay.
But go ahead.
What do you think you do different to keep your premium averages up? Because to sell an average premium of 75 to 80, you've got to be writing a lot of them at 150.
Right.
And you know, fewer than the rest of us, I guess, at the 20 and 30s. What do you think you do as far as getting the premium up like that? How do you present the premium or get them to choose how much that they're going to take? What do you do there?
Well, I think it's the way that the premium is, the presentation is designed. You know, I talked earlier about there's the one-page presentation, and then there's the flip chart. And one thing that we haven't talked about is an agent will give the prospective client maybe a choice of 3. You know, that's always been kind of the typical. You know, I ask guys what kind of I give them the choice of 3, or you know, I never did that. I never did that because when I went through my presentation, and this is how I do it 2 different ways. Just a minute ago, I explained to you, you know, between $1 a day and $10 a day. Well, originally when I had started, and again, I do it both ways, is when they told me that option number 3 made the most sense, I would congratulate them. Yep, Mrs. Smith, you've answered this question like 100% of the people that I talk to do. You know, they see that this is smart money. This makes the most sense. Now, Mrs. Smith, if I can design a plan that you qualify for, do you feel that $200 a month would be affordable and comfortable for you? Now, most of these people are going to fall off their chair. Some of them probably even want to kick you out of the home. Gee, if that's what this thing costs, boy, you know, you're wasting your time. I can't do that. You know, Scott, that's okay. This plan is not going to cost you $200 a month. So I'm kind of taking, I'm letting them feel a little bit more at ease now. I want you to understand, Scott, that there's many different plans that are available. It's based on several different criteria, your gender, your current age, your current and past health history, and obviously you reside in the state of South Dakota. But Scott, if I can design a plan that you qualify for, do you feel that $150 a month or maybe even $125 a month would fit more comfortably for you? Now, the crazy thing about that is some of these people, when you throw out the 200, they're ranting and raving and going all off, but then you start mentioning 150 and 125. Now that's going to fit perfectly for them. It's just kind of a crazy mindset. If that doesn't work, I'll back it down a third time. Again, Scott, I certainly understand that. I want to let you know I can design a plan for anybody's budget. Again, it's based on that criteria. But with that being said, if I can design a plan that you qualify for, would $100 or $90 or even $80 fit more comfortably for you? Now, if I'm getting no, no, no on all three of those avenues, then I may just come back and simply say, well, Scott, obviously these figures don't fit into your budget. I can certainly understand that, and I can appreciate that. Scott, let me ask you this. On a month-to-month basis, where would you feel comfortable, and what is affordable for you? Now they're going to tell me. But if I did it the other way and gave them three different options, my highest priced option might be a heck of a lot lower than what he would allow me to work with. If I showed him one for 30 and I showed him one for 50 and I showed him one for 60, but he is willing and allowing me to work with $100 a month, look at the difference in annual premium.
Okay, now what do you say when they come back to you with, I just want to know what $10,000 costs?
And at that point, I'll simply say, Scott, right now I don't know because I haven't gathered enough information. And to me, a lot of people have asked that question. You get in there and the guy says, I just want to know what $10,000 costs. Well, Scott, I don't know. But I want you to understand this, is that, Scott, I am an independent broker, and I have access to a lot of carriers. But my objective, Scott, is to make sure that I can get you a strong company and one that provides you a very, very good value for the dollars that you're spending. And in order for me to do that, I need to ask you a few questions. And then I'll just start into a few health questions. So I hear what he says, but I'm just kind of blowing right by that because I still want to give my full presentation.
Right.
Now with that being said, Scott, let me ask you this. Have you ever had a heart attack, a stroke, been diagnosed with cancer, or are you currently insulin-dependent diabetic? So now I'm starting to get into a little bit of health information for him.
Well, let me ask this, because you're doing something in a different order than I do that might help me. You're trying to pin them down on what they will spend a month, what they'll budget for this, before you ask any health questions then.
I really do.
Because I put that the other direction. I always go through their health first and kind of get an idea whether I'm going to be able to get them a first day coverage or not, kind of have an idea of, with me, I use several companies, so I know which company I'm going to use kind of off the initial health questions.
Sure.
And then I go into the payment options, and I try to pin them down on an amount like what you're saying. Rather, I used to do the three options, and Travis trained that out of me. But I never did think about going into the budgeting before the health questions, because that kind of helps eliminate what I just told you we get hit with, is they always want to know what $10,000 costs. But once I've done all their health and everything, I can't really tell them I don't know, because I don't know enough about you. I already got all their information.
Right. Well, and that's the way I've always set it up, is when they've told me that, yep, the life insurance policy makes the most sense. I try to get a number that I can work with. Now, I think whether you get the health information first or the dollar amount first probably wouldn't make a whole lot of difference. But that's just the way I've always done it. So I get a premium to work with. I venture into their health, and during that process, once I get their health information, I have a good idea which carrier I'm going to use. I may simply throw out, and here's where I want to find out if they have a valid checking or savings account, is, you know, Scott, they do provide, these plans do have some discounts that are applicable for you. Now, Scott, you don't appear to me to be a tobacco user. Have you used tobacco in any form in the last 12 or 24 months? Well, yes or no. Oh, that's great. Okay. You get the discounted rate for being a non-tobacco user. We all know non-tobacco is a cheaper rate. Oh, and by the way, Scott, let me ask you, who do you bank with here locally? Now, I'm not telling them that that's a discount by any stretch of the imagination. I just want to know who they bank with. Oh, well, gee, I got Wells Fargo. Oh, great. Do you have a checking and a savings there, Scott, or both? Now I know he's got an account to work with. I know he's got this number or this dollar figure that he's allowing me to work with. And so once I get an idea of, you know, everything is just going the way it should be, he's given me a dollar figure, he's shared with me his health, you know, I know what carrier I'm going to utilize, I know what bank account he's got and who he's got it with. At that particular point in time, I'm going to choose my carrier. I'm going to bring out the brochure. I'm going to let him look at it. I'm going to point out some points. You know, Scott, while I'm putting a plan together here for you, I want to share with you the brochure of this plan. And if you wouldn't mind just reading through this, you know, I'm going to point him to the section of the brochure that talks about the rates are never going to change. You know, the benefits are never going to expire. It's non-cancelable. Your coverage starts day one. There's no waiting period if you can qualify. So while he's messing around with the brochure, that's where I'm going to kind of start doing my numbers and figuring out, okay, Scott, you gave me a figure of $75. You know, I'm going to pinpoint. It may be $16,000, it may be $13,000, it may be $18,000, whatever it is. It doesn't matter. But once I get that all figured out, that's kind of when I come back and I'll say, well, Scott, according to the monthly premium that you've allowed me to work with, this $75 that you said was affordable and comfortable, here's how your plan will be designed specifically for you. Now, Scott, at a rate of $78.50 per month, this plan will provide you with an immediate day one benefit of $15,000. I make that $15,000 sound like $15 million. Yeah. Now, Scott, again, this is going to be day one coverage. The day your plan goes in force, you have $15,000 in coverage. No matter if you pass due to an accident or it's a health-related incident that causes your passing. Now, that $15,000, Scott, upon your passing, will be paid 100% to your named beneficiary. Scott, this benefit is also 100% tax-free. Uncle Sam isn't going to get one penny of this $15,000. We're not going to pay it to the funeral home. We're not going to instruct your beneficiary what they have to use this $15,000 for. It's in their hands to take care of your funeral costs and your final expenses. As I go through that, now Scott, I had mentioned to you to kind of read this section of the brochure. Let me explain to you some of the very rock-solid guarantees of this plan. And I want to make sure you understand very carefully or 100% that, Scott, this premium that we have you set up for will never, ever, ever change. It makes no difference how old you become. And Scott, even if you have some future health challenges, this premium will never, ever increase. So you're locked in for life on this premium. Now let's talk about the benefit. Scott, this $15,000 benefit will never, ever expire. It's going to be there the day that you need it. It will never be reduced. It's locked in and guaranteed. So again, Scott, your premium will never change. Your benefit will never expire or ever be decreased. Now, let me share with you another rock-solid guarantee that this plan has. Scott, the company can never, ever, ever take this plan away from you. As long as your premiums are paid, this plan is guaranteed to be in place for you for the rest of your life. Now, another guarantee, Scott, is this plan is designed to build cash value for you. Now, Scott, in the past, you've purchased homes or you've purchased vehicles, what have you. And you know the day that you have it paid off, you have equity in your home or equity in your car. Is that correct? Well, yeah, they all understand that. Well, great. Well, here's what this plan provides for you. In the future years, you're going to have equity within this plan. Now, how does that benefit you, Scott? Well, if you have cash value in your plan and you need some emergency money, something comes up, you need a few $100, a few $1,000 tomorrow, guess what? You can come into your plan, you can pull out your cash value, and use it as an emergency fund. Now, I'll explain to you a little bit different, here later how that works, how you pay that back, da-da-da-da-da. So I'll explain that to them. And I'll also make a little joke. Scott, when do you play the lottery? Yeah, well, hey, guess what? You win that lottery future down the line, and you have no need for this plan anymore. Guess what? You can give the policy back to the company, make no more premiums, and whatever your cash value is, we are simply going to write you a check and send it back to you. You have no more policy, you make no more premiums, but we're going to write you a check for whatever your cash value is. That is your equity within this plan. Now, I'll also share with them some of the non-forfeiture benefits that the plan provides, utilizing their cash value. Whether it's, because a lot of people may say, well, gee, Tim, does this ever get paid up in full? Scott, this plan isn't designed to really be a paid-up policy. It's not a cash-rich plan. You are going to have some cash values, but this is solely designed for the purpose of taking care of your funeral costs. So you're not putting a financial burden on your spouse or your loved ones or your children, whatever. But as you start building cash value, there will come a time to where you can exercise what's called a non-forfeiture benefit. And here's how that works. Your cash value will go to a reduced paid-up benefit. Now, Scott, I can't tell you today what that benefit will be because we don't know in what year you would want to exercise this. But the more cash value you have, the more benefit that will pay up for the rest of your life. So let me give you an example. You got $15,000 today. Let's say 10 or 15 years down the road, you get into a position where premiums are getting a little bit more difficult for you to pay, but you don't want to lose your coverage. Well, you can exercise two different things. You can stop making your premium payments, and we will show you how much life insurance company you have paid up, and it will be enforced for you for the rest of your life. Maybe that 15 turns into 7. Maybe that 15 turns into $8,000. But what I'm saying is you could theoretically stop your premium payments. We're going to reduce your 15 to the 7 or the 8, whatever it might be. But now, Scott, that's going to be a paid-up policy for the rest of your life. You make no more premiums, but you've got our guarantee that here's how much coverage you're going to have in force the day you need it. Now, Scott, there's another option you can exercise with your cash value. And here's what that does. It's called extended term insurance. Now, here's what that'll do, Scott. Let's say you've got X number of thousands of dollars in your cash value. If at some point in time you exercise the extended term insurance, we will be able to tell you how many years and how many days you can continue that $15,000 benefit without making any more premium payments. But now, Scott, that conversation is going to be for, maybe 10 or 15 years down the line. But understand right now you have a $15,000 benefit that's going to be 100% enforced for you from day one. And when it is paid out, as I told you earlier, it's paid out 100% tax-free to your beneficiary. Now, Scott, let me ask you this. Who are we going to pay this $15,000 tax-free benefit to upon your passing? And I've got my pen right on the application in the beneficiary section. I'm not asking a choice of 3 because they've given me everything I need to know to design a plan for them. Now,
are you going through all these living benefit options? Are you going through these on most every appointment that you present?
You mean like I just did the cash value, the non-forfeiture, those types of things? Typically when I know that somebody, when I let them know that their cash values, oh geez, I'm not really too worried about cash values, I just need a death benefit.
You kind of just read it if they're interested in hearing it or not.
Yeah, sometimes I do, sometimes I don't. If I have somebody that's very analytical, and you'll know that as you're talking to these people, I'll leave no stone unturned. I'll go through everything with them. Somebody that just needs a policy, they want death benefits, I'll mention the cash value. Mrs. Smith, if you ever need to use that, there's a lot of options that you have with that. I can certainly explain that to you, and I'll go into it a little bit. But I don't get that detailed on the non-forfeiture benefit. The main things I want them to understand is that this thing is locked in and it's guaranteed for them for the rest of their life. Scott, you are never going to get a letter from Transamerica stating that your premium is going to be increased. You'll never have that. You're never going to get a letter from Transamerica, Scott, stating that your benefit has now expired because you've hit 75 or 80 years of age. You're just never going to get that. Scott, this thing is locked in, guaranteed for the rest of your life. So I'll hit on those very hard. But, you know, again, I mean, I close to the application. You know, and here's why I don't do the choice of 3 or, you know, the asking of, well, Scott, do you want to put an application in? You know, I don't ask them questions that I can either get a yes or no on. I mean, if I know I asked them a question, they can give me a no, I'm done. So I don't give them any questions that they can say no to. I'm asking them pinpointed questions that they have to give me a response to. The options. Which option makes most sense? That's not a yes or no question. When I ask them for a specific premium, it's not a yes-no. They're giving me a specific dollar amount to work for. Now, I will tell you this, Scott, is when I do sell premium, and so I'm not selling benefits. I'm not, you know, Mr. Smith, here's a 5, here's a 7,500, here's a 10. I'm selling premium. And again, so when that plan is designed for them, you know, it might come back where it's $18,000 in benefits. It might come back where it's $13,000 in benefits. But what I do, and to really try to solidify this, is at the end. When, you know, hopefully, you know, when I ask the beneficiary question, I'm just moving right along, I'm filling out the app, everything's going just the way it is. You know, Travis said, you know, it was kind of funny because when Travis said, Tim, you know, when I use this presentation, he said there was no drum roll with it. I said, yeah. I said, that's kind of the neatest part. Because, you know, when you're given a choice of 3 or what have you, you're sitting back waiting for them to respond to one of those 3 choices. And you sit there. And you sit there. Well, you don't have that in this presentation because they've already given you the premium. But again, at the end, when I'm all done, all the apps filled out, where everything is great, you know, I've done the cool down, and I'm going to kind of venture into a solidification set of questions. And what I might do is, well, Scott, we've got all the necessary paperwork here completed to submit to the company for, you know, your approval. And Scott, I know we've gone through a lot of information here, but let me ask you, at this point, are there any questions that I can answer for you right now? Oh, no, you know, Scott, or Tim, you've done a great job. I've got it. Great. Well, Scott, there's a couple of questions I'd like to ask you. Now, we've set this up through Transamerica Life Insurance Company. Now, as I've told you, they're an A-plus company. They've been in business for over 100 years, da-da-da-da-da. They're located in Cedar Rapids, Iowa. Scott, do you feel comfortable working with a highly rated company on this plan? And typically, they don't know the difference between, you know, Transamerica and an ABC company or whoever it might be. No, I feel very comfortable. Great. Now, Scott, as your representative, you know, I'm going to be here to answer any questions or concerns or make any changes to your policy in the future. Do you feel comfortable, you know, calling me for any future needs that you may have, that we can work together? You know, hopefully they're going to say, yeah, you know, you've done a great job. I feel very comfortable. Yeah, that's great, Scott. I certainly appreciate that. Now, Scott, I got one more question. You know, we did set this up at a $75 a month premium. Now, Scott, are you feeling comfortable with that premium? So I'm going to kind of double check to make sure they're okay. If I get a, oh yeah, that's absolutely fine, no problem there. And I'll say, well, that's great. You know, if somebody says, well, you know, Tim, I'll try it. Well, this isn't a pair of shoes that you're trying on. This is a commitment each and every month. Well, Scott, I don't want you to just try this. You know, this isn't a pair of shoes. You know, this is something that you're going to have in force for the rest of your life, but it constitutes this premium each and every month. Scott, would you feel more comfortable if I showed you something that was a little bit less in premium. You know, if I'm getting any kind of a feedback there that this might not work, so I'm either going to show them something a little bit different. You know, I never fill out the premium or the amount of coverage on the app. I leave that till the very last thing that I do. If I need to show different benefits and get a different premium, I can do that. If the guy says, no, I do feel comfortable, that should be very manageable for me. Well, Scott, here, I want you to know this, that if, you know, tomorrow or the next couple of days you realize that maybe this just isn't the right premium for you, I want you to know that this is not set in stone. Okay? We're applying for your $15,000 benefit at $75 a month. But if you, Scott, feel that you need to make some changes to that, whether it's higher coverage or lower coverage, which would be lower premium, I can make that happen. Okay, it doesn't mean that it's either $15,000 at $75 or nothing. Okay, we can make those adjustments. So I want them to know that, hey, this $75 a month is not set in stone. You know, how many times have you written a policy and they call you the next morning, oh my God, I can't do this. You know, this is not going to work for me. You know, so I want them to know that changes can be made. So it's not a take it or leave it. It's, hey, we can make some changes to this. So I try to do a solidification, you know, at the end, you know, before I leave the home. So
let me ask you this. On your appointments, when you set them, how much time do you give yourself for each appointment? Are they an hour apart, hour and a half?
You know, I will do an hour and a half. And, you know, with that, some days I'm running ahead. Some days I'm running behind. You know, one reschedule or one no-show or whatever you want to call it puts you way ahead of the game, and then it's another hour and a half. But right, that might be okay because I've got people that I can go door knock. I've got people that I can, you know, reschedule in there, or maybe I have an amendment that I need to go sign. Maybe I have a policy that I need to deliver, you know, whatever. I've set them before an hour apart. Again, sometimes you're running behind. Sometimes you're running a little bit ahead. But if I've got a lot of appointments, I will try the hour and a half, because if, you know, you have a husband and wife situation, you know, typically those are going to take a little bit longer, and, you know, you have to allow time for the warm-up. And, you know, that's where you're kind of breaking the ice. And you know, everybody asks you, how much time do you spend on the warm-up? You know what? Sometimes it might be 5 minutes. Sometimes it might be 10 plus. If I got somebody that's really resistant, you know, they've got that wall up, you know, I want to be their buddy when I come in. You know, show them that, hey, I'm not here just to, you know, get a check out of you today. You know, I want to visit with you. I want to warm them up. But, of course, you know, part of my warm-up is through the presentation, too. You know, I try to have a little fun with these people. You know, try to get them just to loosen up. You know, I'm just an average Joe, and I want them to understand that, too, that, hey, I'm just here to help. You know, you're going to have your grumbly people, and, you know, it makes it a little bit more of a challenge. You know, you try to loosen them up. But I think no matter, when I set them up at an hour, I really feel that I'm kind of pressed for time, and I don't want that. As a matter of fact, I just had my sister set mine up here last week when I had a couple of days here in town. I did it at an hour, and I did. I always felt like I was a little bit pressed, and so I feel a lot more comfortable doing it every hour and a half. You know, obviously, as a door knocker, time is of no essence. You know, they're going on their own time. But if you're setting appointments, hour and a half is what I typically will do.
That's what I do too. I'm amazed that Travis and JD. I know Travis sets his at an hour apart. I'm not sure about JD, but that just amazes me. 'Cause you got to have a little bit of drive time in between there.
Right, and you know that, yeah.
Anytime I make a sale, it's going to be an hour and a half.
Well, yeah, and you know, I put in that, and you know, it never fails. It's when I have my appointments, I'll be on the far east end of town, and then I'm going to the far west for my next one. Then my next one, way back on the far east side of town. It seems like I'm ping-ponging back. It's just kind of Murphy's Law, but that's, yeah, you're right. That's why I allow an hour and a half. You know, it gives you time when you get out of that home, you know, to take a few minutes to yourself, and, you know, whether you got to get gas, whether you need to use a wheel, whatever. It gives you a little bit of a time. But again, some people, depending on where they're working and how they set them up, an hour sometimes works, and then again, sometimes it doesn't. But I always kind of go on the side that I'd rather have an hour and a half and pretty much stay on schedule than fall behind and have to call Mr. Smith and you know, apologize for or rescheduling, because I may lose it if that happens. You know, Tim, I set this time for us, and if you can't get here, well, let's forget it. You know, I don't want that to happen. So there's always something I can do if I'm running a little bit ahead. But, you know, a lot of times, too, Scott, is if I set them every hour and a half, and I'm running 30 minutes before, you know, Mrs. Smith is at 2 and it's 1:30, I'll just go show up. You know, I'll just go show up. You know, Mrs. Smith.
And that's normally not a problem.
Yeah, you know, they're waiting for you anyway. Yeah, so you're right. It typically is not a problem. I would rather be running ahead of schedule than behind. That's for sure.
Yeah, I've actually waited around to not be too early, and then you get there, and they forgot you were coming anyway. You could have come at any time because you were a surprise to them at any time.
Exactly. Well, and then sometimes, too. Oh, go ahead.
Something I want to ask you about, Tim, is I know your business model is a little different from what I've ever done and most of our agents in that you sell primarily one company.
Mm-hmm.
And I want to talk about that a little bit, about your reasoning behind doing that and what you see as an advantage with that. And then also, you know, Transamerica being your main company, they're no Lincoln Heritage with outrageous rates or anything, but they're not always, you know, going to be the cheapest thing out there that you're competing with. And sometimes you're competing with something they already bought or something they're looking at through the mail and all that, where sometimes every dollar counts. How do you handle all that, and you know, what do you see as the advantage of doing it the way you're doing it?
Well, you know, I've written a lot of different companies, and you know, at the end of the day, they're all pretty good. I like the fact, and when I first jumped into this arena, I was weaned on Monumental Life, which everybody knows. Monumental, Transamerica, it's 100% the same thing. Transamerica used to have a different final expense policy, but they've incorporated the old Monumental product to Transamerica, so they are identical. The only thing is we use the Transamerica because it's more of a recognizable name. But there's several reasons that I typically reach for the Transamerica brochure when I'm in a home. Now, there's going to be some cases where I want to use Mutual of Omaha. There might be some cases where I have to pull out a third carrier. But here's why I write north of 95% with Transamerica. Number one, they're an A+ rated company. I think in today's day and age where all crazy things have happened, this is important to a client. You know, this is why I ask, you know, do you feel comfortable being with an A+ rated company that's been in business for over 100 years and has maintained a very high rating? That means that in the state's eyes and the insurance Review, AM Best, whomever you're using, has recognized this company as very highly rated, good products, good ability to pay claims. They have a lot of money in reserve. You know, do you feel comfortable working with a business that has a great rating? Yes, I do. I know that I might be able to save them a couple bucks by using a different carrier. Maybe somebody that's A- rated, maybe somebody that's B+ rated. Not to say they're a bad company, but this is who I write for. Typically, we'll write them with Transamerica. In most situations, again, you know, if I have, and the way Transamerica is set up is they have two different premium rates for immediate benefits. They have the preferred rate, and then they have the standard rate. Then from there they go into their graded product, which different companies use different terminology. Some companies for a graded benefit is, you know, 30% benefit year 1, 70% benefit year 2, 100% benefit year 3 and beyond. Some companies' graded benefit is, you know, the return of premium, 2-year waiting period. So I know that if I have somebody that is insulin-dependent diabetic, and I know I can get them immediate coverage through, let's say, Mutual of Omaha, who is another A+ rated carrier, and it's a who doesn't know of Mutual of Omaha? I don't think there's anybody across the country that has not heard of Mutual of Omaha.
Yeah, their name's out there.
You bet it is. It's been out there ever since I've been in the industry. Everybody's known of Mutual of Omaha. So I'm using something that's very recognizable. You know, back when I was selling these other carriers, you know, have you ever heard? No, I've never heard of this company. You know, I don't want to fight that. I just don't want to fight that. So they know that that's a good company. They've seen them. They've heard of them. They feel a little bit, in my opinion, they feel a little bit more comfortable. But again, if I have something that's $10 or $15 cheaper through, say, Mutual of Omaha, because insulin-dependent diabetic with Transamerica is an immediate benefit, but it's a standard rate. Okay, I have the option to go to Mutual of Omaha. Now, again, Transamerica, they don't want graded product. They don't want to write that. That's why it's priced through the roof. That's just not their forte. You know, you go to Kemper or Gerber Life, this is all they do. Not all they do, but they'll take that graded benefit all day long. Transamerica doesn't want that business. You know, their rates for the graded product are, they don't differentiate between tobacco and non-tobacco. It's just one rate and here you go. But I think you'll find that overall that Transamerica's rates or Mutual of Omaha, between those two carriers and a guaranteed issue product, Scott, really, in my opinion, that's all I'd need to carry out in the field. Now, if I'm in a competitive situation, that opens my kit a little bit further. You know, that's why they, you know, maybe there is the Oxford, maybe there is the 5-star, and that's okay too. But typically, I think what you're going to find is, you know, if I have a carrier that's $2 or $3 cheaper, I'm not going to sit and waste my time going through 15 different companies in the home to find this guy the cheapest premium that I can find. I feel very comfortable and I sleep very well at night showing him a good carrier with a fair and competitive rate that I can present. Now, for an agent, one thing to realize about Transamerica, and we had this conversation the other day, Scott, and I'm going to go through it again because it's a pretty unique system that Transamerica has.
Number one, on the pay-through account.
Yes, yes. And let me just kind of give you an example of how this works with Transamerica. First of all, let me say this, is that our comp grid from Transamerica that goes from Transamerica to us, to the agent, is not watered down one bit. You know, there's a lot of IMO, and I know you guys give the full renewals too, and that's great. That's how we reward our agents. They're the guys out doing the hard work. You know, there's a lot of IMOs with different contracts that, well, hey, if this agent's at a 115, the renewal from the company is 6%, but we're going to give them a structure of 4%. You know, we're going to keep some of his renewals. You know, we don't water those down, so an agent is getting full renewals from Transamerica. They're getting full renewals from Mutual of Omaha. We do not water them down one penny. So, and I know you guys don't either, and that's why, you know, we've partnered together, is because you guys are working on the same format that we are. Is we want to give our agents the highest compensation with full renewals and lifetime renewals, and that's what Transamerica has. Now, the Transamerica, they pay on issue, not on, or excuse me, they pay on approval, not on first premium. So if I write Mrs. Smith on the 3rd of April, but she doesn't want to start her premium until the 3rd of May, that's okay. I can do that. I send her application in. Typically it's within 72-hour turnaround time. When that product or that application is approved, the very next day, I'm getting my 75% advance on that piece of business. Now, what Transamerica does, and typically you're going to find that your other carriers will do this. You get advanced your 75% of your yearly commission, which is a 9-month advance. When months 10, 11, and 12 come through, that's when they're going to pay you on an as-earned basis in months 10, 11, and 12. So let's keep it simple. You've got a $100 a month premium, and you're at 100% commission. Okay, your annual premium is $1,200. You're getting an advance commission of $900. Now, in month 10 of that policy, when that client pays that $100 premium, you're getting a check for $100. That's an as-earned for month 10. In month 11, same thing. Client pays their $100, you're getting a $100 commission check. Month 12, same thing happens. Month 13, now you're kicking into the renewal phase for that client. But here's what Transamerica does. They do it a little bit different, and it's just such a neat thing. Is, okay, let's use the same scenario. Guy's at 100% commission. He writes a $100 a month premium. Once it's approved, that agent is going to get a check for $900. He still has $300 remaining of his first-year commission. Instead of paying that out as earned in months 10, 11, and 12, what they will do is all of your balance of your first-year commissions, it's in a fund. They know what they owe you, but it's all sitting there. So every time you write a piece of business, 25% of that goes into the balance of your first-year commission fund. But what Transamerica does is, starting in the very first month of that policy getting issued, so it's going to be the first month that they pay that premium, what Transamerica does is they will take what is ever in that balance of your first-year commission fund. They will take the total dollar amount, they will divide it by 12, and they'll start spitting you out a monthly check. Now, what I've done here is just so you have an idea of how this works. Let's assume that an agent is writing $3,000 a week in annual premium with Transamerica. Now again, this is based on 100% commission. This is based on $3,000 a week in production. Now, you can do it at $2,000, whatever you want, but I just did a scenario here for $3,000 a week in premium. So we know that over the course of a month, an agent would write $12,000 in annual premium. Through the course of the month, he has received his 75% advance commission. So he's got a paycheck that month with his commissions of $9,000. Starting on his very first month, that $3,000 that is balance of his first year commissions, he will receive a check. You just take the $3,000, you divide it by 12, you've got $250. Now, if an agent stays consistent, and again using this $3,000 a week in annual premium, month 2 he writes again that same $12,000. He's received $9,000 in commissions. Now his, and they call it a couple of different things, his cash rich program or his 1/12 program, whatever. He's got the $250 from month 1, but now he's gained another $250 for month 2. His first of the month check just doubled to $500. Now in month 3, again, if he's consistent, writing his $3,000 a week, $12,000 a month, he's going to have another $250 added to that cash rich, so now he's getting a check for $750. Now this will continue and continue and continue, and obviously once, eventually some of that first year is going to be fully paid out. But if a guy keeps staying consistent with it, you will start to see a pretty enormous check from Transamerica on the first of every month. Now, we try to explain this and how this works to everybody, but sometimes it's crazy. I'll get a call from an agent and say, gee, Tim, I got a paycheck here from Aegon. I don't know what it is. Well, Joe Agent, this is your cash rich program. Do you remember when I was explaining to you how the balance of your, oh, that's what this is. Yeah. It's kind of, we all live on our advance money. But I'll tell you, when you start to get that big shot in the arm from Transamerica at the first of every month, boy, I'll tell you something. It's quite a check to get. Transamerica, and again, in my opinion, they've got a great system. They've got very fair underwriting. Now, again, I understand that there's going to be certain situations where you probably want to use another carrier. But for the most part, again, I use Transamerica because I feel like I'm selling a quality company with a very fair premium. There's never going to be a chance that their rate is ever going to change. With some fraternal organizations, we do know that they can change their membership fee, and it's right in their policy that they can. I've written the fraternal bit. Well, I wrote a ton of business with RNA, wrote a ton of business with Foresters. There's a difference between an insurance company and a fraternal organization, and that's donating, not donating, but putting into the state guarantee fund. Now, not that any of these carriers are ever going to go bankrupt, okay? And again, I have written...
Shenandoah is an example, though, that
boy, there
they
you
can.
Go. There you go. Shenandoah Life. I had some people with product through Shenandoah, and now they're not around. So it's unlikely that it would ever happen. And again, I have written almost all the carriers that are out there. There's a few companies that I just never got contracted with because I didn't need a duplicate product. I already had one. But again, with the rating that they do have, with the longevity that they've been around. They're a very recognizable name. They do have a very fair and competitive rate. And again, for the cash-rich program, and you know, for an agent where we're buying leads, that really comes in handy. And, you know, Scott, just for, you know, I jumped back in with Monumental and Transamerica here probably about 4 years ago, because I was weaned on it. Then I was with an organization that didn't have it, and then I left that organization and was able to put them back in my kit. And I would just hate to tell you how much my cash-rich check each month has built to.
Yeah, I can imagine you've got a nice one. Covers your leads for you.
Well, let me put it this way. Last year, just on my cash-rich money was north of $100,000. I'm bringing in about $10,000 a month on just my cash-rich check. You know, that's not hard to take. And, you know, again, I don't write Transamerica every single solid home I go to. But this is why we have a couple of alternative carriers that we utilize. But I just don't see a need for a lot of the carriers that are out there. I'm sure that, you know, you can go out and work in the course of the day and boy, this company fit this client the best and this company fit this client the best. And I get that. I mean, I get it. You know, as an agent, you know, we want to have different options available for the client, but sometimes it does get overwhelming. It does get a little confusing to especially a new agent. You know, you take a guy like yourself and Travis and JD. They've been around the block a time or two in this industry. They know what's out there. They know what's available. And having these carriers is a benefit because you can write anybody you want to. You're not captive with anybody out there. But again, for me, I mean, I have that ability, and I know that sometimes I'm going to be a few dollars higher. Sometimes I may be a few dollars less. But those are, in a nutshell, those are the reasons that I do a lot of my business with Transamerica.
Well, it always comes down to, even those of us that are pretty familiar with 6 or 7 companies, you always have your favorites that you pull out on 3/4 of your cases. You know,
Sure.
You always get that favorite company and then your next go-to company. And so Transamerica is not a bad company to have as your favorite company by any means. They can write 3/4 of your business. They've got good commissions. They've got great renewals. And the big thing we have is the lead programs through you guys that are exclusive to the Transamerica Mutual of Omaha that, you know, these new agents coming in, they're trying to figure out who their favorite company is going to be. That's a strong one to pick.
Well, and you know, and I can see both sides to this issue too. Is some agents will say, "Boy, I like doing the phone interview." Well, I get that. I think it's a little more solidification to the client that, you know, they're actually getting on the phone to do a phone interview, kind of locks them in a little bit. You know, with Transamerica, you do not have to do a point of sale interview, which at the end of the day is when you're doing that phone interview, Aptical or, you know, EMSI or whomever that company uses, that person, that interviewer, is looking at the same information that the underwriters are looking at when I turn in a piece of business to Transamerica. Now, knowing proper underwriting for each individual carrier, and I think this is the due diligence of every agent, is to know what that company is looking for. What conditions do they think are favorable? What conditions are not favorable? What medications are deemed as current treatment? What medications are deemed as a maintenance medication? So, once you get to know a carrier and you understand the underwriting, it eliminates, and I've had this presented to me from an agent that was out there. Geez, I submit Transamerica and I get amendments all the time. 95% of the time, Transamerica amendments are from agent error. They didn't submit this with the app, or they didn't do that with the app, or they eliminated this. It's, when I fax in my business, I know once I hit that button on my fax machine, I want to make sure that all my T's are crossed, my I's are dotted, because I don't want to be challenged with an amendment. I want to make sure my business gets in. I want to make sure it's clean. I want to make sure I get paid on it so I can keep going out and flying my missions without any hang-ups. But, that's why I go through my apps 2 and mostly 3 times before I fax it in to make sure it's A-OK. But again, I don't have to do a phone interview with Transamerica. Again, some agents say, well, gee, I had 10 applications and 3 of them had a phone interview. Well, back again. Joe, when you're in the home, are you asking these clients what medications they're taking? Maybe, Mrs. Smith, was there medications in the last couple of years that you were taking that you're not taking anymore? It's just a little bit more field underwriting. But I think no matter what company you're writing, you need to do that. Now, they've got these fancy things, and I'm an old school boy. I carry around this, the pill book is what it's called. I know a lot of guys download it on their phones. I guess I'm just not that high-techy. I'm an old school boy. I carry around the pill book. If I get a medication that I see that is a dual-purpose medication, boy, it might be prescribed for congestive heart failure, but it also might be just prescribed for water retention. I want to make sure the underwriter's aware of that. Mrs. Smith's taking this for water retention only. Has never been diagnosed with congestive heart failure. There's medications out there that clients are prescribed because of Parkinson's disease, but they could also be prescribed that same medication because of restless leg syndrome. Well, restless leg syndrome is not anything that's going to be challenged on a life app, but Parkinson's will be. I want them to be aware of that. Joe takes, 20 milligrams of this for restless leg syndrome only. I want those underwriters to be aware. And what does happen too, Scott, is that these underwriters, they get to know an agent. When he submits business, if this guy is doing things the right way, they're not really going to challenge you on too many cases. But if they see business that comes in from, oh, God, this guy's a sloppy agent, we really need to fine-tooth comb this. You don't want that going on with any carrier.
Yeah, you do get where they do a phone interview on every call if your first 5 cases were all messed up, and especially if they're clean sheeting going on.
Right.
I had a question for you on transfer. Oh, on Mutual of Omaha. Mutual of Omaha is new to me as far as this new product of theirs. I wrote their old product years ago. How is their product? Do they do a phone interview? Is it mandatory, optional, or how does their product work?
There's no phone interview necessary with Mutual of Omaha. Their typical product, the final expense product, is really going to be either immediate benefit or it's going to be the return of premium. So when you look at the differences between Mutual of Omaha and Transamerica, Transamerica really has, again, 2 immediate benefits, preferred rate, and a standard rate, a little bit higher, and then they go into the graded, which is the 2-year return of premium. Mutual of Omaha is going to have you either qualify for the immediate benefit or you're right into the graded arena. So, you know, looking at, again, let's kind of give it, and I know you guys don't carry American Amicable, so we'll just throw them out of the equation here, but let's take a look at Transamerica. You have somebody that's insulin-dependent diabetic, and that's really their only health challenge. Well, that's going to be a standard rate with Transamerica. Immediate benefit, but standard rate. Now, I can take a look at Mutual of Omaha, and they qualify for the immediate benefit. The only one that they have is going to be a little bit more cost-effective for the client. You run into COPD. Now, this is a big situation out there, and agents that are very active in the field, I think they'll agree, is that they run into it a lot. Yeah, gee, I've got, you know, emphysema with this, whatever, COPD, and they're not on oxygen. Transamerica will give them an immediate benefit on a standard rate. And typically, most of your other carriers are going to be a graded or return of premium with COPD, and typically it's mostly return of premium. So there's areas where they really shine, you know, in that case. But yeah, if I've got somebody that's just insulin-dependent diabetic, well, yeah, I can put them on Mutual of Omaha and give them a better rate. Still a recognizable name, still an A-plus graded company, and I've done my due diligence with the client. But no, Mutual of Omaha, and again, we have recently picked them up, and obviously, you know, you guys have it also with us, is that the business that I have submitted with them went through very smooth. The app is, you know, a little bit different. Obviously, all carriers are. But the nice thing there is, you know, they'll send you out emails. Hey, got your application for this client. Here's the policy number. You know, boom, this policy's been issued. You know, with Transamerica, you got to be a little bit more proactive, but you just log into their website. You check everything right there. So feel very comfortable working with either one of those carriers in the final expense arena.
Something that's changed with Transamerica I guess within the last year or so, is that now their application for ages 44 and under is different from the 45 and older. And I haven't really got a handle on that younger age app as far as how does that underwriting compare to the older age app. They don't accept near as many things anymore, right? And then it does have a height weight chart, which it used to not.
It really is. It is a little bit different. It's not really as much of a, you know, cascading app like the 45 to 85 is. They have a really good underwriting guide for the younger ages, which shows health conditions and medications. That is typically where I will go when I'm looking at a 44 and younger. Because, again, it's really not a definite, you know, if they answer
not a yes-no app.
Right. But, you know, Scott, really, to be honest, since they did change that, which was, boy, my time frame's a little off. A year ago, I believe it was, when they came out with the two different apps. I've probably only submitted, you know, a few people in that age bracket, so it's not something I use on a regular basis. But what I've told a lot of the agents is simply this. Make sure you have your agent guide with you, because it's got medications, it's got health conditions in it. It will pretty much tell you if this person was diagnosed with this condition in a certain time frame, here's what you need to write. Here's what they qualify for. If they've been taking this medication, it's been under so many years or over so many years, here's what they qualify for. And that's really what I had followed, and it's been pretty, or not pretty, but everything that I've issued in that age bracket has come out as applied for. So I think that's just a thing an agent really needs to be a little bit more.
We don't run into a lot of them at those ages if we're not, we're not marketing to them. I was surprised. You said you do mail down to age 50, but now when we talked about your set price leads, the agents can limit that to 60 to 80, can't they?
This, Scott, is where we'll get into this with Brian. There's certain leads that we do have available that it's going to be, boom, set 50 to age 85. Here's going to be the income. You may be able to eliminate, typically on the 29 or on the set lead prices, you're really not going to be able to eliminate zip codes. To keep the integrity of the set lead price, they need all the data in that particular county for that type of a lead. But again, at the end of the day, I've ordered both. I've worked with both. You can tweak the mail, just by using direct mail a little more than you can with a 29 or a set lead price, a $29.75 set lead price.
Right.
But Brian will be able to answer a few more of our questions. I just visited with him yesterday about the new source that we had for the set lead price leads.
Yeah, the thing with me is I've always found it to be a lot more successful mailing to the 60 to 80 age range, and of course I don't like to go down to zero. I just feel like, especially if you go down to zero, when you get down into the lower 50s, you've got nothing but people that have been on disability their whole adult life. They've never had two nickels rubbed together.
Right.
And,
well,
and
Scott,
to catch home the younger they are.
Yeah. And for me, and again, this is just me, this is just my opinion, that a lot of times, too, when, and I've always done mine, 50 to age 85, I get more frustrated at the 83s and 84s that I get than the 50s to 60s. A lot of times these 80 to 84, they fill out
they haven't ever bought anything by 80. They're a hard sell to start with.
Well, sure, and then you're looking at, their health condition. If you run across somebody that's healthy, that's a big plus. And then, of course, now their premiums are through the roof, which, if you land one, it's great. It's good commission, it's high premium. But, with the 50s, I get what you're saying, because some of those, you're right, they're on disability, they're laid up, but I'll tell you, a lot of them, too, they're still working. They're collecting a paycheck. And so, again, for me, I really don't try to tweak things too much.
Just run them as you get them. When you get your lead card, I know you've got your sister setting your appointments now, but at some point you set your own appointments, and most of our agents do set their own appointments. They don't have an appointment setter.
Mm-hmm.
When you sit out your stack of lead cards, call them up on the phone, what do you say to set the appointment? Give me basically your script that you use, or what words you say when they answer that phone.
Yeah, again, Scott, I really try to keep it very low-key. I don't want it sounding scripted. I simply might give you a call and you answer, and if I've got a husband and wife on the card and it's a male that answers, I'm just going to assume it's you. Hi, Scott, how you doing? Well, I'm doing great. Gosh, what a wonderful day today, isn't it? Just, well, I'm just going to start a little conversation with him.
Mm-hmm.
He might say, well, gee, who is this? Or if he doesn't, I might just jump in and say, hey, Scott, the reason for my call is, number one, this is not a solicitation call. In fact, I'm getting back to you regarding the information that you've requested pertaining to the state-regulated life insurance policy to cover your funeral costs and final expenses. Now, Scott, do you recall getting that in the mail and filling out the card and sending it back to my office? Some people do, some people don't. If they do remember, wonderful. Well, Scott, what I'd like to do is get that information out to you. That's my responsibility. Now, I'm going to be in your area, maybe tomorrow, maybe Monday, maybe Tuesday. Scott, is morning or afternoon better for you? And I don't go through any information about any companies. I don't go through any information of life insurance. I don't try to pre-qualify them. My objective is just to get to their door and get inside. And, of course, you're going to fight a lot of different things. Gee, I don't remember, sending that in. Scott, I can certainly understand that. A lot of people get a lot of stuff in the mail, but in fact, I do have the card that you filled out. I see here that you are, currently 67 years old. Your wife, Nancy, is 65 years old. I've got you at 102 Main Street. I just want to make sure I get this information that you've requested. Is tomorrow morning or afternoon better for you? So I just try to keep it very non-threatening. Well, gee, Tim, what's this all about? Well, as you recall, Scott, the form that you received in the mail talked about the ability for you to apply for a state-regulated life insurance plan that will pay up to 100% of your funeral costs and final expenses. Now, at the top of the form, Scott, it talked about the, whichever form I'm mailing out, it talked about the 2014 benefit updates, or, we have different lead cards that go out. I'm going to make sure that, I keep that in the same pattern of what form that or what mailer they did receive. Typically these people will remember. Well, yeah, gee, that's great. Well, I thought you were just going to mail me something. Scott, that would certainly make my job a lot easier. But to be very honest with you, I don't know what plan you qualify for. But after just a short visit with you, Scott, I'll be able to determine what plan you do qualify for, and I'll make sure I get that correct information to you. Now, is tomorrow morning or afternoon better for you? So it's always that. It's kind of like the same thing as the sales process. You may have an objection, you handle it with a rebuttal, and you go right to the close. You're closing the appointment. So again, I keep it very simple. Again, it's not scripted. You're going to get your people on the phone. Well, who's this? What do you want? And you just have to hit it right to the head. Scott, hey, I'm getting back to you. You requested me. You requested the information that I have for you. I'm getting back to you, regarding it. Well, if you can't mail it, just forget it. And they may hang up. Well, guess what? I'm going to go knock on his door. I'm just going to act like that phone call never happened. What's kind of nice with me is I got my sister calling, so when I show up, they don't know I ever called. I can play up, and boy, trust me, I can play stupid with the best of them. But again, if I'm calling, that's fine. I get a hang up or whatever. You know what? If you can't, I'm not interested. These are all smokescreen objections. The people that don't want to see an agent are typically buyers. They just don't want an agent come because they know they're probably going to buy something. That's the person I want to get in front of. But there is something that triggered them to respond to that mailer. And we all know the 3 reasons, you know. This is something I learned way back in the day from Travis. You know, there's 3 reasons that they typically sent that in. You know, they have absolutely nothing set up. Or number 2 is they may have a little bit of something in force, but they know they don't have enough. You know, or number 3 is they want to leave you know, a special benefit for a charity or a loved one or what have you. There was something that triggered their mind. You know, these people, I love these people that, oh, I just wanted to see what it was all about. Well, of course you did. And I'm going to show you why you sent it in. Because my presentation is going to show them exactly, you know, what the situation is. You know, I love these. Well, gee, I've already got life insurance. That's great, Scott. I congratulate you. I think everybody should have life insurance in force. There's specific reasons for life insurance. This plan provides a specific reason also. It's to take care of your final expenses and your funeral costs. You know, it's a specific need. You know, some people don't connect that, gee, I've got life insurance. A portion of that is going to go to my final expenses. You know, I let people know, look, I've got a lot of life insurance. And when I die, yeah, part of that's going to take care of my funeral costs. But when I don't want to do this over the phone, but when I do get in front of somebody that says life and they have life insurance, well, John, let me ask you, what was the purpose of that? Why did you purchase, why $50,000? Why not 75 or 100? Well, I figured 50,000 is enough. Well, let's take a look at your situation. You know, you can really barrel it down to these people, and some people may be comfortable with what they have. Some people look at it and go, you know, this is a great idea, carrying a separate plan to take care of my funeral costs. Now, my life insurance that's in force is going to go to pay off my credit card, my mortgage, you know, what have you. And typically, if you get into a situation like that, you can really kind of break it down to, you know, and at the end of the day, show me somebody that really has enough life insurance to take care of everything properly. Probably a very, very small percentage of the people out there do.
Right.
So I try to keep it separate. Yeah, you purchased that. You know, what was your reasoning for purchasing that policy at that amount? Yeah, you're really going to kind of dig deep and find out what they have, why they bought it. Does this make a good sense? Does this not? You're going to have your tire kickers that are out there. But again, this is why I buy a lot of leads, and I go through those. You know, I'm going to find my diamonds in the rough. And again, you know, there's days where everything goes just right. There's going to be days where maybe half the day went right, the other half you probably could have taken the day off. And there's days that you could have just taken the day off. But again, the reason I don't is, you know, activity creates aptivity, and that's why I try to stay very active when I'm out there. You know, I've got my blinders on when I'm in the field. I hate working in my backyard because my car has a tendency to follow the navigation system right back to my office. And we all have those issues. You know, gee, I don't want to work more than 20 miles away from home. Why? Because you want to go back home? You're not going to make any money sitting at home. You're going to be making money at somebody's kitchen table, living room, couch, wherever you feel comfortable. You know, so when I work, I'm typically 100 miles away from home, and I've just got my focus on. It's game on, and where am I going to go? Back to a motel and sit and watch Gunsmoke? No, I'm going to be out there seeing people making money because I want to reach my goals. I want to get those goals set and reach them and you know, do what I do. And that's provide an income for me, provide an income for my family. And, you know, again, if I'm out there wasting time, Scott, that's something I just cannot recycle. Once that time is gone, it is gone.
It's gone. Let me ask you another thing. What about people who, so you're working a ways from home base, so it's not easy for you to come back, obviously.
Right.
What about people who want to stall you? I don't make decisions first day I hear this. I've got to sleep on it. How do you handle it?
Well, generally what I'll do, and you know, you're going to get your 3 common objections. That's one of them. I need to talk to my kids. Yeah, I don't make a decision overnight. Yeah, I may say, Scott, I can certainly understand that and appreciate it. And a lot of my clients have felt the same way, but here's what they found. The best time to make a decision is when you have all of the information presented to you. But now, Scott, I want you to understand that this is all hypothetical based on you qualifying for this plan anyway. Now, and again, this is, and let me back up into my presentation a little bit, is, you know, I'll do my warm-up. I'll start into, you know, my presentation is all just a matter of transitional phrases into one part of the presentation to the next. So if I'm sitting with you, Scott, basically what I might say is, you know, Scott, it has really been a pleasure getting to know you and your history and what you've done and your family. But Scott, the reason we got together today is, and I'll put the copy of the mailer right in front of them, and I'm just going to read it to them. Scott, as you can see, this is what you received in the mail. The bottom portion is where you had filled out your name, your age. Here's a copy of it. I've got a copy of their responder card that they sent in. But Scott, very simply what the mailer says is, you can see it talks about the 2014 benefit updates. It simply says that you may now apply for a new state-regulated life insurance policy to pay your funeral costs and final expenses. It goes on to read, please return this card and you'll receive the latest information on how this special plan will pay up to 100% of your funeral costs above and beyond government benefits, which, Scott, I will explain to you. And this will provide you with up to a $25,000, some are $35,000, whatever it might say, up to a $25,000 tax-free benefit. Now, Scott, when you read through that, and obviously filled the bottom portion out and sent it back to my office, Scott, what were your thoughts and what were your concerns? You know, now typically, you're going to have people that give you the correct response. You know, I don't have anything set up. You know, I pass away today, you know, my children, whatever, is going to be on the hook for taking care of my funeral costs. Now, Scott, you know, I commend you for that. This is something that losing a loved one is very, very hard and difficult situation to go through, and nobody certainly wants to compound that with a financial burden. So I certainly do commend you for getting this information. Okay, so I've got that reason that they've given me, and I'm going to use that. You know, I don't make a decision overnight. I'll explain to them that, you know, right now, you had sent this card in. You have a need for this product. You're not making a decision overnight, Scott, and quite frankly, you're 67 today. This has kind of really been on the forefront for you for, let's say, the last 47 years. Best time for you to have purchased this would have been when you were 20. Now you're 67. How much time do you really need? You know, I'm going to make this sound as urgent, but try to keep it in a professional manner that makes these people think that, you know, and I get it, they're just getting this information. But, Scott, the best time to make a decision is when you are presented with all of the information. Well, I just need to think about it. Well, Scott, what specifically is it that you need to think about? You know, think about it, as you know, and a lot of people, that's just a smokescreen objection. You know, when we walk into a furniture store or wherever, you know, the salesperson makes the biggest mistake he can make. Can I help you? No. I'm just looking. You know, now the salesman's shot. Now he's done. You know, leave me alone, I just want to look. And we're all trained to do that, but I didn't walk in there because I got nothing else to do. There's something that I came in here for that I want to look at, that I'm interested in. And that's kind of the same thing with these clients. There was something that they read that sparked a need, and they filled out that card. And sometimes we have to dig a little deeper to find why they did that. And sometimes they'll just spit it out, and it's perfect for us. I've got nothing. Well, or you know, I was just curious to see what this was. You know, that to me, again, is they're interested. And, you know, so we just try to dig through it. So, again, it's, you know, I don't make a decision overnight. Well, again, you know, Scott, I'm not here to collect any premium. The first thing we want to make sure is that you do qualify. Nothing can be set in place if you don't qualify. Now, Scott, you did share with me that, you know, the reason you sent this in is because you have absolutely nothing in place. Now, again, to back up a little bit further in my presentation is when I'm sitting with them, and before I get into, when I ask them that question, I've shown them their options. You know, Scott, which option which option makes the most sense to you? Well, option number 3. Wonderful. Before I get into the question, you know, if I can design a plan that you qualify for, I'm gonna let you know, Scott. Here's how my business works. I'm an independent broker. I work for a lot of different companies, and I'm not married to any one of them. My objective is very simply this: I want to be able to provide you with a top-rated carrier, but one that provides you a very, very good value for the dollars that you're spending. Now, Scott, would you have any objections working with a representative that operates in that manner? Oh, no. Gee, that's what I want. Great. I'm his guy. I'm his Walmart of final expense products. I've got them all, or I have access to them all. So see, these are things that I can use. You know, I just want to think about it. Or I want to look around. I've just taken care of that one. So I never get that one. You know, I need to look around. Well, Scott, as you recall, you know, I'm not married to any one of these companies. I've got them all. And I'm going to make sure I get you with the carrier that's going to provide you the best value and a highly rated company based on your information. You're 67, you're a male, you live in the state of South Dakota, and I need to get your current and past health history. Now, Scott, there's going to be some carriers that will qualify you, but they're going to be a really high rate. I want to search the company that provides you with the very best value but is a good rated carrier. So I'm letting them know that I'm the guy that they need to talk to. We've gone through the information. You know, Scott, the best time to make a decision is when you're presented with all the facts. And I've just done that through my presentation. They know what the average cost of funerals are. I've showed them their options. You know, I showed them what they could do by doing nothing. Showed them what happens if they go to a funeral home. And I've showed them how the state-regulated life insurance plan works. So they're giving me all this information that I'm just putting into my holster to use at the back end. Now, Scott, you did share with me that, you know, you have nothing. Now, obviously, again, you know, this is all hypothetical based on your approval. We can't do anything until you get approved. They know they have a need for it, but we're just there to make sure that we can get them the very best thing that's available out there. It's not going to work 100% of the time, but these people are going to buy for two reasons. It's logical and it makes sense, and they have a need for it. And unless you've done a very, very good presentation, so they have all the information, they know what they're, I'm trying to kill them from going to another insurance agent. I'm trying to kill the fact that they can go to the funeral home. And this is what they might be thinking in the back of them. Well, he never said anything about the funeral home. Maybe I'll go talk to Meyer Brothers Funeral Home and see what they have. See, I'm trying to kill that out. Here's your options at the funeral. Now, granted, I know that funeral homes sell life insurance policy, but I don't work for Meyer Brothers Funeral Home. I work for Tim Winders. And typically, I'm going to have a better product than they do anyway. So I just want to kill that right off the front. But, again, the waiting, Mrs. Smith, there's really no decision to be made until you get an approval. How long, Scott, if I were to give you 30 days to make a decision on this, would you think that would be enough time? Oh, yeah. See, now they think you're letting them off the hook. Well, that's great, Scott, because I don't even need your first premium until 30 days down the road anyway. I'm not here to collect any premium. I'm just here to make sure you qualify. Now, Scott, once you do qualify, guess what? We can make any decision on the benefit. We can make any decision on the premium. Scott, is that fair enough? Let's just see if you get qualified. So you really have to dig deep, into what they really mean by those objections. Again, we're trained to say that. I'm just looking. I don't make a decision overnight. These are some things that you just dig deep into to get what the real reason is.
That sounds good, Tim. We've spoke for almost 3 hours. We almost didn't set the timer long enough.
Went pretty quick, didn't it?
Interview. I asked you one question, there'd be an hour. I like that. JD was the same way. Everybody told me after that JD interview, you're such a good interviewer. You ought to do more of these. Well, if I get a guy that can talk real well, I'm a great interviewer.
And I probably get a little long-winded on my responses, so if I did, I do apologize for that.
Well, that's what we want. That's what, agents, and especially new agents that just have never had anybody they know that's ever done this. They've never, they don't have a close friend that they can just talk for hours to about this, They eat this stuff up because, this is stuff they are yet to learn. It's all new to them. So, and even experienced agents, they're just like me saying I learned from you about trying to get a premium commitment before I go through the health questions, because then it's logical that when they hit me with how much is 10,000, I don't know yet because I haven't asked you the health questions. The way I've been doing it, I can't pull that because I already know what I'm gonna rate them at. So we can learn from anybody and everybody, but definitely a guy that's turning in $400,000 a year personal production. There's a lot to learn from you, Tim.
Well,
you're doing a lot of things right.
I just try to keep things simple. I try to see a lot of people. With my grown responsibilities, my numbers aren't there at what they used to be. But boy, I'll tell you, if I really do believe that if I still had my 3 and 4 work days a week, I would probably write that kind of premium again. But it's just because I'm confident. I do the same thing every single home I'm in. I don't add anything. I don't subtract anything. I just do the same presentation. And, the more you do it, the better you become at it. And don't ever be afraid to make mistakes, because that person sitting across the table from you, they don't know if you've made a mistake or not. So it's not a big deal. And it's just practicing. You know, like I mentioned, the doctor, they practice medicine. You know, they're still learning. They're still, you know, every time they do a cataract surgery or a gall, whatever, they're practicing their profession. And that's what we do each and every day. And, you know, having somebody like you and having somebody like Travis and JD that have been doing this a long time, what better people to learn from? You know, you want to learn from the guys that have been around the block. They know how to navigate through the trenches. They can show you how to make this business very, very successful. And again, I commend you guys for the system that you do have. And hopefully we can get, you know, your guys plugged into, you know, the system that we have, which is very similar, different lead options. But, you know, the more people that I can talk to that have been in this industry, that do a great job, yeah, my ears are wide open, because I'm still learning. And I'm still going to be learning in the future. And I want to pick brains of guys that are just out doing the thing. You know, tell me about your business. You know, if I can pick something up from him, and I pick up something from you and JD and Trav, guess what? Again, that makes me pretty dangerous out there. And I just want to be better than the guy that they've already seen. I want to be better than the guy that they may see in the future. And that's just all we try to accomplish. And again, this